Good day. Thank you for joining me. My name is Warren Davison and I'll take you through the July 2020 PSG Wealth Offshore Fund performance. Starting with the macro scene, global equities gained, although the economic data confirmed the severity of the second quarter downturn. Ongoing central bank and government measures continue to provide support for equities and corporate bonds. US equities gained, supported by robust quarterly earnings from stocks such as Amazon, Apple, and Facebook. Data showed the US quarter 2 GDP fell sharply and the dollar weakened. For July, we saw a decline in Eurozone equities. The economic data confirmed the severity of the downturn in activity during the second quarter, and some countries saw COVID-19 infection rates rise. UK equities also fell for the period, as fears around the second wave of COVID-19 infections weighed on investor sentiment. Looking at emerging markets, EM equities enjoyed strong gains, helped by US dollar weakness. Taiwan performed well amid gains for technology stocks, while progress on reforms boosted Brazilian shares. Touching on fixed income indices, government bond yields fell amid data confirming deep contraction in the number of the large economies. The approval of the EU Recovery Fund also provided support for Italian government bonds. Looking at another matrix which breaks down the fixed income indices into their different maturities, as well as governments, corporates, and high yields. What we can see here, for the month, the largest gainer was long duration, high yield US bonds. Before we get into the fund, it's important just to remember the PSG multi-management philosophy. Our objective is not to back one horse, but to spread the bet across a few managers which we feel have a competitive advantage in what they do, whether it be their style, thinking, research, etc. When we combine these to produce a final portfolio solution, we look to achieve our three pillars of 1. Consistent above average performance, 2. Below average risk, and 3. At a competitive price. Looking at each of the PSG portfolios and just starting with the asset allocation. Here we can see that it's important to remember that all the PSG Wealth Global Fund of Funds are multi-asset portfolios and therefore include both equity and fixed income investments. Looking into the fixed income side, as I showed earlier with the asset class returns, these will include exposures to governments, corporates, and high-yield fixed income, and therefore will react accordingly within the portfolio. Relative rankings remain strong across the board, however a mixed bag over the 1 month. The longer term numbers are still in the first and second quartile, which are favourable. Over the recommended holding period, which is illustrated by the rectangles, here we have achieved average and above performance for 4 of our 6 fund of funds. Looking at some highlights for the month. The PSG selected managers had a bit of a tough month, with 47% of underlying managers outperforming their peer group average over the last month. Value stocks lagged growth for the month, with the MSCI World Value and MSCI World Growth returning 2.6 and 6.9% respectively for the month. Looking at our quantitative risk radar, 4 funds appeared on the radar. For the global preserver, the pound class had a tough month, with the pound strengthening significantly against the dollar. Looking into the individual funds and starting with the global preserver, the fund produced a 2.1% return in July, outperforming its sector by 4 basis points. The fund remained slightly behind the sector over the recommended holding period of 3 years by a narrow margin of 78 basis points. As you can see from the relative tables, the 3-year number has felt the pressure of the global sell-off. However, the longer term numbers remain first and second quartile. As I showed earlier, it is important to remember that the fund does hold roughly 20% in equity and will experience increased volatility during times like this. The recent market impacted the fund in two ways. Firstly, equity markets detracted, in particular dividend-paying stocks. And secondly, the global credit spreads widened, causing price decline on the fixed income securities. Onto the global moderate. The fund produced a 4.77% return in July, underperforming its sector for the month by 68 basis points. The fund is above its benchmark over the recommended 5-year holding period by 50 basis points. And looking at the relative rankings, here you can see that the fund has remained second quartile over all observed periods. Looking at the global flexible, here the fund has produced a 5.11% return in July, outperforming its sector for the month by 196 basis points. The fund also remains above the sector average over its 7-year investment horizon by 5.89% for the dollar class. As you can see from the relative tables, the fund remains top quartile over all periods and is in the top 10 funds for both the USD and GBP class. Lastly, we'll look at the global creator. Here the fund produced a 6.77% return in July, outperforming its sector for the month by 138 basis points. The fund has outperformed its sector over its recommended investment holding period of 7 years by 3.27%. Looking at the relative tables again, here you can see that the fund has held up exceptionally well over all periods and remains top quartile. As a conclusion, and just to tie everything together for our 3-pillar approach, when looking at this we can see the consistent above average performance at below average risk and at a competitive price. Thank you. Please take note of the following disclaimer.